Hi, I'm Amy Iannello, and I am a realtor. And today I would like to talk to you about what to do if you can't make your mortgage payment. The first thing that you need to do, which is very important, is you need to contact your lender. If your lender is not aware that you are having problems, then they're not going to be able to help you. There are programs that you may qualify for if you have a hardship that is a direct result of the COVID-19 pandemic. The first thing that you need to do is you need to find out if you have a federally backed loan, such as Freddie Mac or Fannie Mae. And what you can do is you can go to a website, www.makinghomeaffordable.gov. And this will let you know if you can qualify for certain programs that are related to the CARES Act. Once you do this, you have other options that your lender will discuss with you. The first one that you may want to consider is to refinance. And refinancing is to basically see if you can get a lower interest rate and see if you can get your monthly payments lower. However, you need to be made aware when you do this, one, you may not qualify, and two, you have to pay closing costs, which are associated with this. The next thing you can do is something called a forbearance. A forbearance is something that you need to discuss with the lender. The lender usually will give you up to 180 days to be in a forbearance. Again, there are programs that you need to discuss with the lender regarding the CARES Act, which is affiliated with the COVID-19 pandemic. For the forbearance, there's a few things that you really need to be made aware of. The first thing is when you are in a forbearance, that means you and your lender have agreed together that you do not have to make your monthly mortgage payment. When you don't make your monthly mortgage payment, that payment does not go away. It just gets kind of put on a back burner. Now, when the forbearance is up, you may need to pay all of that money up front in order to become active with your mortgage again. So that means for those 180 days, which you have not paid your mortgage, for each one of those payments, you may have to make that payment up front. There are some programs that the lenders are now doing with the CARES Act that you don't have to make that forbearance payment up front, where they may tack it on to the end of your loan. I want to stress that this is very important that you get this information from your lender, and I would highly recommend that you get it in writing just to protect yourself. Okay, the other thing is a loan modification. So a loan modification is definitely worth trying, especially in today's market. So you need to prove to your lender that you are having a financial hardship. The financial hardship may be from job loss, it may be from sickness, it may be from divorce, it may be from death. There's a variety of different reasons. So again, you have to discuss this with your lender. If your lender is not made aware that there's issues, you're going to have more problems. So in a loan modification, there's a few things that you have to do. You have to prove your financial hardship. You have to have pay stubs, taxes, and 3 months of bank statements. You also need to write a financial hardship letter declaring why you are asking for a loan modification and why you're having financial difficulty. Some of the other forms that I'm sure the lenders will tell you and they can explain with you, you need a 710 form and a 4506T-EZ form that all of the lenders will require. The other thing you can do is declare bankruptcy. This needs to be your last resort, and it's not so easy to do so anymore. The other thing you can do is you can sell your property. So you can sell your property for a regular sale or a short sale. The difference between these two is a regular sale is when you actually have equity in your home. Say, for example, you don't have equity in your home. Say your home is valued at $300,000 and on your mortgage, you owe $400,000. So in that situation, you would do something called a short sale. Okay, so at this time, if you are considering a short sale, this is something that you need to discuss with your lender, and a licensed real estate agent can also assist you. So since short sales are a little more complex, I want to go into a little bit more detail regarding this. So just like a loan modification, to be considered for a short sale, you need to declare financial hardship. There is a lot of paperwork affiliated with short sales. Sometimes when you put your house on the market for a short sale, it does take a lot longer for the property to close versus a regular closing of a property. If the short sale is taking a long time, where you're not getting a lot of people come to your property, where you're not getting offers, your mortgage company may continue to put your property into foreclosure. A lot of times they don't do this because they see that you are actively trying to sell your property. The mortgage companies would prefer that you actually sell the property versus allowing it to go into a foreclosure. If you have a second mortgage on the home, or if you have a home equity line, they also need to agree to a short sale. If a short sale closes and you owe more than it's worth, which is obviously what a short sale is, you need to pay off your lender, and they may ask you for an additional amount of money. There's no guarantee that this will or will not happen. So let's say that your home was sold and you sold the home for market value, which is less than what you owe on the property. And let's say that the mortgage company actually forgives you for that and you don't have to give them any money. So at this point, this is actually considered taxable income. So this is something that you will have to report to the IRS. In some instances also, the lenders may offer you some financial assistance to move or find another property to live in. They are not really in the business of kicking people out in the street. Okay, the next thing I want to discuss then is you can sell your property for cash. There are a lot of investors out there that will buy your property as is. If your roof is leaking, if you have mold in your house, if your house has not been updated in 15 to 20 years, they don't care. They will buy your property for cash. However, most investors will not buy your property for fair market value. They usually like to buy the property at a lesser amount. This again depends on how much you owe the lender. And this is something that we can discuss further. The advantage of selling your property for cash as is it is a quick closing. It usually closes within 30 days or less. And at this point, you can avoid any foreclosure actions, which may be foregoing by your lender. So if none of these things work out and you stopped making your payments, and you called the lender and told them that you can't make your payments and nobody can come to an agreement, or if you don't call your lender, you will be in foreclosure. What that means is you stop making payments on your mortgage. And then your lender will serve you a notice of default. What that means is this is the beginning of the foreclosure process. During this process, you still have some time to talk to the lender regarding a modification, a short sale, etc. If you do nothing, you will not have a home anymore. Your lender will reclaim your home. Before this happens, you will be giving a notice of sale, and that means that your home is either going to be reclaimed by the bank or it's going to be sold at an auction. You still have some time to talk to your lender regarding this. Now, I do want to talk about a few other things when this happens. You can also do something called a deed in lieu of foreclosure. And what this basically means is you are giving your property back to the lender. in exchange for the cancellation of the note, which means the money that you owe them. I want you to be made aware. Everything that is done will affect your credit. A foreclosure will affect your credit for approximately 7 years. A short sale will affect your credit for approximately 7 years as well. However, you are normally able to get back into the home buying market within 2 years. A deed in lieu of foreclosure will affect your credit. A bankruptcy will affect your credit. And these are all things that you need to be made aware of. So at this time, the most important thing for you to take away from is you need to contact your lender. You need to work with your lender. You have options. Don't let your home just sit there and go in foreclosure. It is not going to benefit you as a consumer. Thank you for watching this video today. Please subscribe to my channel and click the bell notification. Therefore, you can be notified when new videos come out. Thank you so much. Have a great day.